Hello, I'm Richard Hunter and welcome to our look ahead for the week commencing the 19th of August. Well, it's certainly been a tumultuous few sessions for markets around the globe, and that kind of spillover is expected to continue into next week. Of course, we already had the US-China trade spat and concerns that that could be indicating or leading to some kind of global recession. What's now happened, of course, is that German GDP growth has gone into negative mode. We've had some weak economic data coming out of China, very possibly as a result of those trade wars, and we have President Trump rallying against the Federal Reserve yet again to cut interest rates, something which the markets expect to happen, very much expect to happen in September. It's just a question of whether that would be a 1/4 or a 0.5% rate cut. Against all that backdrop, we've also had the bond market on what they call the inverted yield curve, which normally presages a recession, adding to investor concerns. But just stepping back from that and looking at the wider picture, there aren't at the moment too many indicators in the US signalling a recession there. And indeed, if you look at the American indexes in the year to date, they still very much remain in positive territory, although obviously not as high as a couple of months ago. We've got the Dow Jones still up 19%, the S&P 500 up 13%, and the Nasdaq up 17%. Obviously, the FTSE 100 has also been caught in some of that negative sentiment, although ongoing weakness in sterling has provided something of a prop to the FTSE 100, where a lot of company earnings are, of course, earned overseas. FTSE 100 up around 6% in the year to date. So as we move into the next week, it's very much the macro issues which are going to be front and centre. The first half reporting season has pretty much now come to a close, so there's not too much to choose from in terms of the UK. FTSE 100 house builder Persimmon will be coming up with some half-year results. What normally happens here, of course, is that the results come through very strongly, but they tend to be reasonably poorly received because house builders have tended to be in the firing line as a result of Brexit. Persimmon shares, for example, down 24% over the last year, despite those strong performances, currently yielding 6.6%, so investors are being paid to wait. But it'll be interesting as ever to see what the reaction to the results are versus the actual results themselves. There's also a half-year update from the infrastructure group Costain that had a profit warning back in June. Over the last 3 months, the shares are down 55%, so they'll be looking to give the market something to cheer about to reverse some of that downtrend. And finally, rather further down the list, is Rank Group. This is a group that is responsible for the likes of Mecca Bingo and Grosvenor Casinos. Again, a very tough place to be at the moment, especially with government curbs on certain parts of gambling coming through. Share price down about 16% or so over the last year. Thank you for watching. Have a great week.